Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma. Fortis Healthcare is entering a new phase of growth, focusing on operational efficiency, strategic expansion, and differentiated services. In Q1 FY26, it posted strong results with revenue at 1,741 crore rupees and hospital EBITDA margins at 21.1%. Its diagnostic arm, Agilis, also saw improved margins and volume growth as Fortis scales up capacity and widens its footprint. The focus now is on how it is reshaping its strategy for future growth. To understand what lies ahead and how the current performance fits into the company's broader transformation, I'm joined by Dr. Ashutosh Raghuvanshi, Managing Director and CEO of Fortis Healthcare. Welcome to the show, sir. Thank you so much for taking time out for us, and many congratulations for the strong quarter this time.
Thank you, Neetu. Thank you for having me.
So let me begin by asking you that you have made several, moves recently. So these are acquisitions, O&M agreements, and geographic expansions. So what is the long-term strategic vision for Fortis Healthcare over the next 3 to 5 years?
Yes. We had always a strategy that we want to be focused in different clusters. So we were limiting ourselves to the clusters where we were present. But now, with the O&M we have had with Gleneagles, we have expanded that into another new cluster. Both Bangalore and Chennai, we have Bangalore and Mumbai, we already have our presence. So the hospitals over there would become part of the existing clusters, whereas the Hyderabad and Chennai would be a new cluster for us. The strategy is to have a significant positioning in the healthcare ecosystem and be a provider of choice. We want to differentiate ourselves with quality and not necessarily with the other numbers. But while doing so, we want to be profitable and sizable to make an impact.
Okay, sir. So the Fortis is now managing Gleneagles, India's hospitals under an O&M model. So do you see an asset-light partnership becoming a key growth lever going forward for the company?
We are not opting for asset-light models per se because the revenue doesn't get consolidated and the entire effort which is put in running of these facilities doesn't get translated both into the bottom line as well. So we do not prefer that model. However, we have some limited places where we have such arrangements already, and this is a new one. But this is not a preferred mode. We will opt for more of brownfield expansion as we continue to do so. And at the same time, we are looking for opportunity to do either greenfield or inorganic expansion.
Okay, so with this Shriman super specialty and the Gleneagles tie-up, Fortis has expanded its hospital bed count significantly. So what are the next high priority regions or specialties where you are looking to grow?
Yeah, so we have been focusing on higher technology for quite some time and also on the field of oncology. So many of our hospitals didn't have oncology. Only 5 years, 6 years back, we started the journey of converting most of our hospitals onto oncology setup. At the same time, we are looking at other treatment modalities, high-end modalities like robotic surgery, for example. So currently, we have about 15 robots around in our network. And we plan to expand that further. Those are soft tissue robots, plus we have orthopedic robots also, which would be of almost equal number. So the growth in robotic surgeries has been almost 75% year on year. And oncology also has seen a growth of about 27% over the last few years. And that is the fastest growing segment. And it's becoming one of the largest services provided by our company. So we will continue to focus on these areas. And Oncology is a main growth driver because the incidence of oncology conditions is increasing, and that will continue to remain so.
Okay, so having said that, in these segments, are you putting in more capex into these particular areas which are driving high volume and growth? And if yes, how much is the capex that you are planning to pull in?
Yes, so we year on year for next couple of years we are putting about 700 crores per annum. Part of it is maintenance capex, but majority of it is capex for upgradation of the treatment modalities and facilities. We have already made a lot of investment in last few years, so we got an MR Linac and we got some advanced gamma knife, etc., installed, and many Linacs we have put across our network. So that part is already done, and that would yield results now. But we continue this journey, and we will have additional 3 or 4 centers which we will do over the next 2 years.
Okay, so we have seen a improvement in EBITDA margins, especially in the hospital business. If you can tell us that what were the key drivers for this performance and what is the way forward?
So one of the drivers was increased occupancy. As you would have noticed that it came to 69%. We expect it to improve further as we go into the next few quarters. Our aim is to bring it to above 72%. And at the same time, that was one of the levers. The second is our POP growth has been quite healthy. Our POP growth has been on the backing of a case mix change because of the high volume of daycare business, which is typically in oncology setups, as well as high-end surgeries, as I mentioned earlier, robotics, etc. That has driven the RPOP quite significantly. So these two factors have played very, very important role, and we continue to work on efficiency side as well, and which helps in the bottom line.
So, what are the strategies in place to sustain this momentum?
Yeah, so one of the things which we are expecting is that the brownfield expansion which we are doing, a lot of beds in that are coming online during this year. So we would have about 900 bed capacity addition. Out of that, we will commission at least we will operationalize at least 50% of the beds during this financial year. And these being brownfield expansions, these absorption of these would be pretty fast. There would be no initial negative flows here. And because of that, we expect this to help us improve our position from the current level. So we expect that the current momentum will continue and grow from here on.
So, sir, the recent acquisitions that you have made, we have seen in these results that the net debt has increased. So, what is your capital allocation strategy going forward, and how do you plan to balance this growth with leverage?
Yeah, so our net debt to EBITDA ratio is still quite healthy, about 0.92x, which we believe is quite sustainable. We don't expect it to increase further from here. There could be minor increase this year, but from next year onwards, you should see a downward trend in the total debt. This debt is mainly due to acquisition of the 31% stake in Agilus and the brand Fortis, which and SRL, which we have acquired recently. So those are the contributors for the debt. The rest of the brownfield expansion, which I spoke about earlier, is being primarily funded by internal accruals.
Okay, sir, so how is this integration of Agilus shaping up post the 31.5% PE stake acquisition, as you said, and what is the roadmap for this particular segment?
Yeah, so we did have a little bit of hiccup in Agilus at the time of brand change. We could not state clearly that SRL is now called Agilus because we did not own the brand at that time. However, now we that is behind us. We have established the brand significantly. The lot of brand building activity which has been done in last few quarters, that is yielding results now, and that's why you see a improved performance. We have had 5% volume growth and 4% value growth, about 9% growth in the diagnostic business with 23% healthy EBITDA. And we expect this margin to expand further and the revenue growth also to become comparative to the industry levels, which is at least 12% or so. So for this, we are doing various things. We are trying to rationalize our network, and we are also expanding on our test offerings, especially on specialized tests like genomics, which is our focus area. And that will drive the top line as well as the bottom line because of the other efficiency measures we are taking.
So, with the preventive diagnostics gaining traction, so how is the demand in the urban and semi-urban areas, because these are lifestyle-driven diseases are rising. So, how are you actually dealing with that, and what are the strategies in place to grow that segment in these tier 2, tier 3 cities?
Yeah, so currently about 12% of our business in diagnostic comes from wellness business. This business is highly competitive and it is highly commoditized as well. So the expansion of the collection centers or the patient touch points is what this we are following as a strategy over here. We have increased our net collection centers by almost 200 in last quarter. And that will increase our reach into these areas. We are present in the big metros, but we are also present in many smaller cities, etc. And that growth is going to come through these collection centers, which we are the sort of the distribution network, which is going to become more robust with the opening of these centers.
So, we have also seen good growth in the medical tourism segment. So, are there any newer markets that you want to enter, and how do you plan to deepen your company's presence in medical tourism, both in terms of infrastructure and strategic markets? So, what are the plans ahead?
So we have seen a little bit of challenge on the international business in because of the geopolitical situation in last few 6 7 months, I would say. But that has not affected the overall volume of business. But if we look at the network level, only about 7 to 8% of our business comes from international channels. Though in terms of absolute number, it has been growing quite healthy. But the percentage contribution to the revenue has not changed dramatically. We have been focusing a lot on Central Asian countries as well as on Africa. Our focus on Africa has become more focused now. We have opened several information centers, and we are doing sustained marketing activity to deepen those markets.
Thank you so much, sir, for those insights, and thank you so much for taking time out for us today.
Thank you. Thank you for having me.
That was Dr. Ashutosh Raghuvanshi talking about outlook of Fortis Healthcare. And for more updates, you stay tuned to Business Today.
If you like the video, do like, comment, share and subscribe.